Welcome, ladies and gentlemen, to this very special episode of the Utah Stories program. This is my episode on inflation and the relationship between the Federal Reserve, which is our Bank of America, backing tons of securities, and the Treasury, where I want to basically explain to you how that relationship works. I'm going to try to do this without notes and just pretend like I'm talking to one person, explaining what's going on. This has been like an extreme amount of research for me because every time I learn a little bit, I learn how much there is I don't know. Economics, I think, is one of the most worthwhile things you can study, especially as a small business owner, if you really want to try to understand why things are the way they are. Really, it all comes back to economics. Like, if you want to understand why our housing prices have absolutely gone through the roof in Salt Lake City, it comes down to economics. It's the law of supply and demand. Right now, the demand exceeds the supply, and whenever that happens, the prices go up. So what I've been examining is the Federal Reserve is essentially earmarking, along with Congress. The Federal Reserve, as I said, is the Bank of the United States. It backs up our currency. It determines the the monetary policy of the United States, the money supply of our currency, and the Treasury is in charge of our fiscal policy. So the Treasury Department is a part of the executive branch of government. It's underneath the president, but the Federal Reserve is a completely private entity. They're a nonprofit, but the relationship between the Federal Reserve and the Treasury is extremely interesting because basically the Fed has this printing press, and they can issue treasuries out into the marketplace at any time they want. They can say, okay, we want to get a bunch of money into circulation, so we're going to now issue 10-year bonds on U.S. Treasuries. We're gonna put them at this interest rate, and if we can sell enough of them, great. We can just all of a sudden print, say, $2 billion, and we can then release that money into the economy as treasuries. So does that make sense? I hope it does. If it doesn't make sense, another relationship the Fed has with the Treasury Department. The Treasury Department we recognize there is a major failure in the banking industry, as there was in 2008. Banks are about to topple. They're running out of money. Customers are running in. They want to take out all their money. So what can the Fed do to prevent that from happening? They can tell that bank, look, we will give you more money. We will basically back your bank and all of your depositors with the assurance that their money is safe. And for every depositor who comes into your bank, we'll go ahead and give you the money that you can give to them. But then we own a chunk of your bank, and you're going to pay us back. So they can do that. They do that with every bank out there. If you look at FDIC insured on your banking statement, you are insured by the federal government that your money is safe. That is in order to prevent from what happened in the Great Depression from happening again, where people had a massive run on the banks. They just wanted to get their money out because they knew that the way banks operate, your money isn't actually in the bank. Your money is invested into somebody else's home. Your money is, if you've seen It's a Wonderful Life, that money isn't here. That money is invested in Joe's house, and Joe's money is somewhere invested in Sally's house. You can't get your money out of here. It's like that money doesn't exist. It may show up on your statement, but it's not at the bank. So the Fed backs all of those deposits through the Fed. And the way we can control the inflation rate, the Fed can control the inflation rate, is if they start to see prices going down on items like gasoline. We're seeing gas prices plummet right now because nobody's driving their cars. That's actually a big problem for these corporations and for the whole oil and gas industry, because now all of the eastern Utah fracking operations are probably on hold because they cannot extract the oil out of the ground for the cost it takes them to that they would be able to sell it for. So they're basically just ceasing operations till the price of gasoline goes back up, the demand goes back up, and they can refine the oil that they're extracting. How that's tied to the Fed is if prices begin to dip, what the Fed can do is they can say, all right, well, let's increase the supply of money. Because if people have more money, they're going to spend more money, and the demand is going to increase, and prices are going to increase. Think about that for a second. It's kind of complicated. If prices start to dip, but people have a supply of cash, they can artificially, or they can increase demand in products just by increasing the money supply. If people have more money in their bank account or more money in credit cards that they can spend, they can go out and have more spending power. So that's the first concept I want to explain. The second concept is, so what happens if there's too much money in the supply of money? What happens if what's happening now, despite interest rates being extremely low, meaning money is extremely cheap to borrow, despite our booming economy as we've had, we have a pandemic. So they've decided they're going to essentially print $6 trillion of additional money and pour that into the system. What do you think happens when there's an excess supply of cash in the system? Think about it for a second. Prices are going to go up, right? Because people are going to realize, oh, well, if everybody's got more money and there's way more demand for products, then I'm going to just charge more. That has not happened yet. In fact, probably the reverse has happened. People are probably curtailing their spending right now because they have less money. But as all of the stimulus spending gets out there, as the government continues to pour and pour and pour more money, they're calling it parachute money, the Paycheck Protection Program and the IDLF program, as they continue to just dump money into the economy, people have all this money, they're going to start spending the money. Naturally, prices are going to go up. So I've been examining how much inflation are we likely to see? What is going to be the point at which prices just go possibly through the roof because we've printed so many dollars? And I found this to be a very difficult question to answer, honestly, because the United States dollars, the dollars that we have in our system, we're not exclusive to the United States. We are a world currency. In South America, I found some figures. There is so many U.S. dollars. In countries like Venezuela and countries like Argentina, where their currency is fluctuating all over the place, they back their currencies with U.S. dollars. A lot of homes and families, they'll stockpile all the dollars they can find and that they can get because their currencies are so crazy and their government leaders are making such stupid decisions. That's not only the case for countries in South America, that's the case for Africa. They love to have U.S. dollars. That's the case for Eastern Bloc, former Soviet Union countries. There was an estimate of how many U.S. dollars are out of our country and in other countries. And the estimate is there's actually more print money in other countries than there is in the United States. So if there's demand in other countries for our securities, for our U.S. currency, that creates more demand than there is supply in a lot of these places. So would that then mean that we could just dump more and more money into these countries and and possibly just like create, they call it fiat value? I don't think so, because for one thing, they are backing their own currency with their own US dollars, their collection of dollars. If they start to find out that we are making rash decisions about our currency to try to keep the economy going, and we start printing more and more dollars, what do you think they're going to do with that reserve of dollars that they have? They're going to get rid of them. They're going to spend them. They're going to say, screw these US dollars. I want euros, or I want yen. I'm going to trade these in for something else. Those people in all these other countries all around the world who are hoarding US dollars right now, it's only the case that we are the cleanest dirty blanket, is how I heard an economist explain it. We are the cleanest. All currencies, all governments are printing currency right now. They are all dirty blankets. But we happen to be one of the cleanest because we've maintained a good monetary policy. We've maintained somewhat responsible fiscal policy when you look at our debt to GDP ratio. So let's look at debt to GDP ratio for a minute. So what is that? What do I mean by that? So in our entire country of the United States, we produce a gross domestic product. It's all the production capacity we have for our entire nation. The thing about the US is we have by far the biggest GDP. Our GDP is even greater than all of Europe, right? I want to show you some charts about how big our GDP is. It's massive. We produce a ton of product. We produce a ton of value into the marketplace of the entire world economy. Our debt to GDP ratio is not the highest in the world. We are the 7th highest in the world. There are a few countries, as you can see, who have higher debt to GDP ratios than we have. So a lot of people are like, they can pay off all of that debt because they're not the dirtiest blanket. Like you can see, Japan is worse off than we are in terms of their GDP to debt ratio. You can see the other countries. I don't have the chart in front of me, but there's a lot of countries that are worse than we are. So will we experience inflation? It all comes down to that. The thing that you have to understand about money, a $100 bill, because of its value no longer being tied at all to a gold standard or a silver standard or any tangible backup mechanism, it only has value insofar as we believe in it. If we don't believe in it because either our economy begins to crumble, which could easily happen if we kept our economies closed for months on end, or our GDP goes way, way, way down, that perceived value we have in our currency also begins to go down. So even if they start parachuting more and more and more money, what's going to happen? Prices are going to go up because the perceived value of our dollars goes down. That's how I believe inflation will happen. A lot of the people will say because we are the reserve currency of the world, we will never know inflation. I don't believe it. I'm not buying it, because that $100 bill that you keep in your pocket that you know is worth as much as you can buy with it right now, that is only valuable insofar as you give it value, insofar as we all maintain our perceived value of that dollar bill or that $100 bill you have in your pocket. So that's how I've been able to wrap my head around it. I hope that this little lesson has helped you understand a little bit better. I don't believe that we can continue on the course of spending that we're on. I don't want the value of our bills to be tied only to our perception. I want it to be tied to actual numbers and the strongest economy in the world and the best economy in the world, the best currency in the world. I think that gives us a stable economic system. And so with that, I want to tell you about a couple of our sponsors. The Utah Stories Show is brought to you by just 2 sponsors. And if you guys can go out and buy a bunch of grass-fed beef and a bunch of awesome carpet, you're going to make this program way more successful. So go out and buy your carpet from the Carpet Barn in South Salt Lake. Tell them you found out about them at the Utah Stories Show. They have an amazing selection, a 25,000 square foot warehouse, beautiful plush carpets, bargain basement prices. They hook you up with awesome installers. They're a ma and pa family run business. I can highly recommend the Carpet Barn because I personally use them. The same goes for the Canyon Meadows grass-fed beef. I can highly recommend their product as well. They produce the most amazing pasture-raised beef in Utah. I've been to their pastures, I've seen their cows, I've seen how incredible their regenerative agriculture is working, because their pastures are like 4 or 5 feet tall. These big, rich, thick grasses these cows get to eat their entire lives. And because their cows are so healthy, the meat is extremely healthy for you to eat. Go visit them at cmrbeef.com and try the grass-fed difference today. Thanks for watching the Utah Stories Show. Please give us a 5-star review on iTunes, subscribe to us on YouTube, follow us on Instagram, and especially go visit utahstories.com and subscribe to our newsletter. We right now don't have any premium subscriber access points. We want to provide all the premium content to everybody who's a part of this program. I want to do more deep dives like I've done on this one. Go check out our show notes. Go visit utahstories.com. Check out inflation for yourself. Learn about it yourself. Really try to wrap your head around it. It is seriously an excellent economic concept to begin to understand. And I can highly recommend the works of Milton Friedman. I love reading Thomas Sowell. He explains the economy in a book called Basic Economics. Go learn this stuff for yourself. It seriously gives you a much broader, vaster understanding of the world around you, which will make you a much better consumer of news and information. So with that, thanks for watching. I'll see you next time.